Good morning, everybody. Welcome back after yesterday's day off. Today is Friday, January 10. It's 3:30 a.m. on the East Coast. Today is Jobs Friday. I've got some data for you. I've already shared it in the chat room. I'll share it for you here so we can run through it. I would love to be able to be jovial and comedic and put a laugh on everybody's face, but that's some pretty devastating shit that's taking place over there in California. So let's just get on with what we got to do, and you can spend the entire weekend, how you want to. Jobs Friday. Jobs report comes out at 8:30 in the morning. Like I posted there in the spread room, hopefully it's right here on screen really quick. No, it's taking a couple of minutes extra. Let's go down here again. And nope, apologize. Taking a little bit too much of your time. I know you're busy. Here. Apparently, the Supreme Court voted against halting President Trump's sentence. So that sentencing is set for 9:30 today in the morning. This is on the hush money trial. I don't know whether or not it has any kind of effect, but I am giving you a warning, simply as all. The reason the warning is there is because, like I shared with you on Thursday, after having compiled the data that I'll go through here with you in a minute, looking for another bullish put credit spread, very similar to the way that we had it there on on Wednesday, where that 59.05, 59.10 closed full credit, closed up 150%, $3 credit, $2 risk. Looking at something very similar to that. So again, that is your data that you are looking at. But remember, today's Friday. It's been a great week. You've had the trade of the week out there since Monday morning. The January 10 SPX 6010 6005 call credit spread from $3. It is virtually worthless. It was virtually worthless on Wednesday. It was already up over 100%. We as well went and on the third time of trading these March 21 QQQ 500 puts from Monday morning. Again, I don't always get the best entries, as you can see there. I got in there Monday morning at 850. They dropped down to 776 and were trading below 850 for the majority of Monday. They embarked on the plus 30% zone there on Tuesday afternoon, and they virtually traded all day Wednesday up above that plus 30% zone. So again, that has fulfilled its requirement. So run you through here real quick. Again, market being closed, we're green on the month. Not big, but we're green on the month, being above 59.0326. We're green on the month. Come over here onto the SPX, and again, you got your full credit close there on Wednesday, your 59.05, 59.10s, market being closed today. Plus 1% level would be up here at 59.7743. I have serious doubts on that, but it's not what I'm here to do. This SPY number here is not correct. I didn't update it, so do not take these numbers as your plus and minus 1% level. But what I wanted to bring you on here for is the jobs. Here's your jobs. These are all your jobs report states going back to after Israel invaded Gaza, which is your big bottom in October of 2023. So your jobs report since then is all that I'm looking at. And as you can see here, you are consistently green. September and August, big red down days. September and August, go look at your charts. This was already a major beginning of a downward move, August, September. So taking that into context. Green closes there on Jobs Friday is pretty consistent, even going back prior to the Israel invades Gaza low. Again, on the spreads, I've shared with you again the bullish put credit spread for today. Come over onto the QQQ, and again, how you continue to come down here into that 511, just onto that 511 zone and supporting. You'll see it on the chart. Pretty dead donkey over here, the QQQ. And I can tell you what that's setting up for, but I'm not going to waste too much of your time being here on a Friday, because today is about the IWM. The IWM loves to get that rocket shit to the upside on a Friday, and the VIX likes to get crushed on a Friday. And where did we close? We closed right at that 221 area. just embarking down below that 220 for the bounce there on Wednesday. Today, plus 1%, 223.93. You don't even need to put a gun to my head, and I can say, yeah, very possible that you get that plus 1% day to day. So I'll take you on to the charts, and we will move on from everything that we've got going on here. Let's get this out of the way. And futures, as you can see on your futures, they're improving. They are improving, but they got a lot of work to do. Improving over here on the Dow, which is the weakest link, down here at the 100-day moving average. The NASDAQ continuing to support on the 50-day moving average. Whereas you're over here on the SPX, the ES futures, well below the 5-day, the 10-day, the 50-day, and the 20-day. And those are all your upside targets. Over here on the Russell 2000, 200-day moving average, well abandoned, well below, untouched for quite some time. And you've got your 10-day, your 5-day, your 100-day, and your 20-day, which are applicable, which we're not going to hit the 20-day. But anyway, that's enough. Everybody doesn't need to know that because it's too much information. So I bring you on to the SPX. SPX, here's our high over here on Monday. Boom, 60.2104. Again, nothing to be afraid of. We had that beautiful play to the downside on Monday into the close. And the structure of this, again, coming off of that low that we were talking about last week, the structure of this looking very clean, coming off that 60.21. A, B, C equals 2, perfectly. 1, 2, 3, 4, 5, perfectly. You're going to look at this either way, bearish, bullish. It fits both parameters. So there is nothing aggressive to be looking at on this to the downside. Upside, same warning comes in. This is not a go blind and get bullish and get ridiculously exposed for the upside movement, because your 50-day moving average right here at 50.52 is where you're coming into your problem zone. As you see here, when we broke down below 59.60 on Monday, gapped up on Tuesday, broke down below it, resisted it. You can zoom out and look at your 59.60 and you can understand why the 50-day moving average, possibly, likely with 59.31, which has been here for 3 months, 59.35, then your 10-day and your 50-day moving averages. Those are your upside zones for today. 59.60 at best. The trade that we're looking at is that we close above where we closed on Wednesday, 59.1825. Come over onto your VIX, and VIX just over here, pillow biting on 1811, which 1811 being a big warning level on here of 1811. 5-day, 20-day, 10-day, 50-day, 100-day, 200-day, all well below. And you got your little gap here. So again, with the VIX, how it likes to get crushed on Fridays. Let's zoom out a little bit here. And here is last week, Friday. Just coming near that 1811 into the open and smack down to 1622. 1622 has been a very good supportive area. 1811 and up above it needs a very significant catalyst. So watch for that VIX to get crushed here on a Friday like it always does. Over here on the QQQ, as you see here, since you're dropped down there on Tuesday, you're just hugging, biting the pillow on the 50-day moving average. We filled this gap. This can be removed. So that gap has been filled. We have no gaps to the upside other than what is above that 528.61. But again, you've got a very clean, clear, crystal clear resistance area at this 516.50. Come onto your QQQ from a wider range. And as you can see here with this 510, 511, dip, bang, dip, bang, dip. There you go. First time we traded the QQQ 500 puts for March. Second time we traded the QQQ 500 puts for March. And this is the third time we've traded the 500 puts for March. All of them worked. All of them paid. Now it's time to take your foot off the gas. Give it a little bit of a break. That gap is filled. That gap is filled. You have no gaps. You are virtually a nerd. Dia, dead donkey. Dead in the water, dead donkey over here on the Dow Jones. Earnings don't begin for another 2 weeks. Russell 2000, once again, dead donkey. Dead donkey, supporting any dips that get down below 220. And your 223.71, 224 is your resistance area. And today is Friday. So 223.71, 224, your best case scenario upside with the 50-day moving average way the fuck up there at 230, and you ain't touching that 50-day moving average. Russell 2000, as you can see here clearly, your 2213 is supporting like a champ. Your 2288 having resisted with 2307 untouched since we fell through it on FOMC day. So that's what you got. Enjoy yourself on Friday. Enjoy your weekend, Saturday and Sunday. Enjoy every single minute of every single moment because, hey, you still got internet. Your house didn't burn down.
Doing okay today?
I am.
Well, that's really great!
Ah! Oh my God, do you have Tourette's too?
Oh my God! Do you have
Yes!
Tock! Oh God!
Please!
Please!
But I don't have ticks!
Oh, oh, okay.
Yeah.
Meow! Meow!
I have a cat. I respond to meows with quiet meow.
Oh, Mrs. Claus!
No!
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 Just fingernails.
God, I'm so glad you have such a great attitude about it.
I just think the life is too short to take seriously.
Yes! Yes!
This is me! You have a great day, ma'am.
You too.